The biggest fear most new private money lenders have is simple. What if I lose my money? And honestly, this is a valid question. So in this video, I'm going to share with you 9 steps on how you can minimize risk and lend with confidence. My name is Chaim Oman Palman. I'm a real estate investor who became a full-time private money lender after realizing that it's a much predictable way to generate cash flow with less drama and less headache. I decided to become a full-time private money lender. And in this video, I want to share with you the 9 steps that I think you should implement if you want to protect your capital and have a more safe investment. Step number 1, choose lender-friendly markets. Focus on non-judicial foreclosure states like Texas, Georgia, or Tennessee. Foreclosure in these states is faster, more predictable, and cheaper. So know the timeline of the states that you're going to lend in as far as the foreclosure go, if it's complicated, if it's easy, how long it takes, and how much it's going to cost you, because you don't want to be in a state like New Jersey or New York if you need to start a foreclosure process on unsuccessful loan. Step number 2, you want to vet the borrower. You want to work only with experienced investors that completed at least 5 successful projects. It can be a successful flips or successful refinance, but you don't want to work with the newbie, because when you start to work with the newbie, you just take more risk. You want to work with professionals that know how to communicate, that know how to present a deal. You want to verify the HUD statements, the before and after pictures of the projects, because at the end of the day, they can tell you one thing, but you need to trust but verify what they tell you as far as the experience go. Step number 3, start with smaller loan amount. There is no need to go with significantly high amount. I recommend to start your first few loans under $150,000. You want to minimize your exposure. You don't want to go and play with bigger amount of money as you still learn the business and gain experience. I want you to build trust slowly, know the process, do few deals, put it under your belt before you start and play with larger sums of money. I personally, again, all of my loans are $100,000, $200,000, even though I've done over 200 loans. So start small, build confidence, build trust, and learn the process before you start to play with larger amounts of money. Step number 4, stick to conservative loan to value and loan to cost. Your maximum loan to value should not be higher than 70%, and the maximum loan to cost shouldn't exceed 90%. Lower ratio equal more safety and room for error. So you want to be conservative, especially on your first few loans before you take higher risk. And in general, I think staying below 70% loan to value can put you in a very good position as far as protecting your capital. By the way, if you want to go deeper, join my school community where private lenders can connect, learn, and grow together. You'll get access to training, tools, and real-world examples to help you become a confident, well-protected lender. Click in the link in the description to join. And now let's get back to the video. Step number 5, avoid heavy rehabs. Big remodels equals big delays, risk, and cost overruns. Can need to deal with permits, with inspections, and it just complicates the project. So make sure you're focused initially when you're just starting out on light or cosmetic rehabs. This will make sure the rehab can be completed in a short amount of time and have a higher chance to be completed successfully. So always review the scope of work before you fund the deal, and always look at the budget. You want to make sure you look at itemized scope of work and to make sure that it matches the pictures and the video that the borrower will send to you. So again, focus on small rehab, cosmetic rehabs. That will decrease your risk. Step number 6, always require the borrowers to put skin in the game. They need to bring money to the table in order for you to fund the deal. Why? Because if they put money into this deal, it means that they are more committed to the deal, and it means that it's less than likely that they will walk away from the deal and get into default. So again, if they don't put money into the deal, you don't want to fund this deal. Step number 7, you always want to work with a local attorney. The local attorney will review or draft your lending documents, and the lending documents include a promissory note, the deed of trust or the mortgage, and sometimes a personal guarantee or other documents that are required in this specific state that you're going to lend in. So always make sure you work with an attorney, because if the deal will go sideways, the lending docs will protect you. The lending docs will enable you to start foreclosure process and to take back the property and hopefully recover your capital. Step number 8, always work with title company. Always close through a title company. Never fund a deal and send your funds directly to the borrower. You always want to have this third-party company that will protect you, protect the borrower, and make sure all the documents are done correctly. You want to make sure you get a lender's title insurance policy in case there's any title issues with the property. And you always want to make sure you record your lien in first position. You don't want to do second position deals, especially not as a beginner. Maybe later on, if you want to explore second position loans, you're welcome to do that. But if I was you, I will always do first position loans and always work with a title company. Step number 9, you want to require the borrowers to get an insurance policy before funding and add you, the lending entity, as loss payee. Why? Because things can happen, flood, fire, vandalism, and in case that's the case, you want to make sure that your funds is protected and the insurance policy will send you a check before they send the borrower check. So make sure the coverage of the policy must equal or exceed the loan amount, because you don't want to get a check that is short than your loan amount. So here it is. Here is the 9 steps that you should take in order to protect your capital. Number 1, choose a lender-friendly markets. Number 2, vet the borrowers and make sure you work only with experienced investor. Number 3, start with smaller loan amount. There is no need to go crazy with bigger amounts. Step number 4, stick to conservative loan to value and loan to cost. Again, below 70% loan to value. Step number 5, only minor rehab. There is no need to go and do heavy rehabs. Step number 6, require skin in the game for the borrowers. Needs to bring money to the table. Step number 7, work with local attorney to draft and review your lender's documents. Step number 8, always work with title company. Never fund the deal directly to the borrower. And step number 9, require insurance with adding you, the lending entity, as a loss payee. So if you take these steps, I think you're going to have a very good chance to protect your capital and not to get into too much trouble. If you want to learn more about how to become a confident private money lender, join our school community. And if you want to check my previous video that I did on why private money lending is a much better option than rental property, you can check it here.